What's up, everyone? Welcome, 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 welcome. You are live with the credit doctor, baby. Welcome, welcome. Happy Tuesday to everyone. I know it has just been an exhausting weekend. It is just horrible, horrible, horrible. Some of the stuff that's going around the country. And I would be remiss not to say something a little bit. I'm not going to go into it a long bit or do a long spiel on it because I'm going to do it. Actually, I'm going to dedicate another show to George Floyd. I want to say to his family, my prayers, my staff, and other people that I know around the country. Our heart goes out to you. It's just ridiculous what happened to him. And one thing that I kept seeing or echoing in my spirit, it says in the New Testament, it says, "No greater love than this, than a man would lay down his life for a friend." So it's very important to treat people, love thy neighbor as thyself. And so the thing that happened, and just to see the life just drift and just leave that particular young man, it is just horrendous. And so I get the anger. I get people, that are just processing it how they have to process it. It's just ridiculous. And I'm just so hurt. And I know how it is. I lost my mom almost 3 years ago. And so it still hurts. And so I can just imagine how they feel with George Floyd. So I'm 1 billion% behind him and his family. And I want to say to them, things are going to get better through prayer and through, just giving it to God and just making sure that you continue to trust in God, because that's the only thing that'll get you through it. That's the only thing. Cry if you have to. Hug if you have to. Do what you got to do just to get through this particular season. And it's all over the country now. It has hit all over the country. But I wanted to say that, to give my respects to George Floyd and his family. It could have been you. It could have been me. It could have been somebody that you know. And this is not the same. I'm a 70s baby, as I said earlier today. So this is not the same regime as it was, once upon a time. And I'm from the old school. All right. So let's just love each other, get better. That's why we're doing this show tonight. And it's just going to be better. You keep praying for him and pray for your family. Pray for your sons and your daughters, because you don't want anybody, just because they decide to do something stupid or something negative or something, in harm's way. So for me, I'm just in awe of how his brothers that I'm seeing on CNN and different other platforms, how they're, keeping it together. All right. The strong will survive and you will prevail. So my hat just goes off to them. But nevertheless, it's going to be an amazing show tonight. We have the real estate broker here, Lewis. I promise you I'm not going to mess his name up. Lewis is with me tonight. He's backstage. And so welcome to everybody. Arlena, what's up, girl? Girl, what you talking about? All right. This is another co-host of mine. She comes in. Girl, what you talking about? All right. So welcome. This particular show is going to be for anybody, first time home buyer, second time home buyer, third time home buyer. Just keep doing it until you get it right. All right. And so Demi, welcome. So everybody's coming on in. Hey. So it's going to be amazing tonight. You don't want to miss this. This young man is one of the nicest professional young men that I know here in the Dallas-Fort Worth, Texas. When I first met him, he treated me with dignity and respect. He took out time to call me back, took out time to tell me about himself and his business. And he has a booming business. And I'm going to put everything that I have, all the leads, the referrals, everything that I know in this Texas area behind this young man. That's how much I believe in him and his business. All right. So I'm not gonna do a whole lot of talking. I want him to get it out. Mr. Jeff, what's going on? Mr. Williams, one of my new clients. Thank you for joining me. All right. Lord, wait 1 minute. I got my sister in the house, Myra. Come on here. He's gonna teach us tonight. I want to know, what is the difference between the FHA, the conventional loan, the VA loan, the FHA, the conventional loan. So if you have questions tonight, don't think that you're going to be irritating either one of us, because we're going to try to get it in, and he's going to do what he does best, process. He is excellent. He's a real estate broker. He's a dad. He's a family man, and he will get you the right information. There's a lot of realtors out there that feel like, they're so high and mighty that they don't even want to talk to you and explain the process. They just want to go straight to the end of the sale. He's not like that. All right. So without further ado, I'm going to bring in my guest. I want to get straight to it tonight. His name is Lewis. He's going to pronounce his last name so I won't butcher it and mess it up. But tonight, not messing up. And I'm so happy and grateful. So without further ado, this is Mr. Lewis. Mr.
Hey there.
Lewis.
Hey, everybody.
On, man?
Hey, doing good. I'm still waiting to see who this broker you're talking about.
I told you, man, I can introduce you, man. Well, welcome to the Live Credit Show with Castello. So thank you so much for agreeing to come. Thank you for last week's show, just helping me, get the information out there. And you got a lot of people here tonight that, it's coming on in. What's going on, Tyrone? What's going on, Sheila? There go my Sheila. So it's gonna be amazing. It's gonna be amazing. Wait a minute, South Carolina State Bulldogs in the house. All right, South Carolina. Well, back home we would say Cacolana. All right. So, Lewis, I want you to just tell us what's going on. Jennings, what's going on? So tell us a little bit about yourself and, just introduce yourself to the people. You already have a platform on YouTube and around Dallas and around the country. So just give us, who is Mr. Lewis?
Well, thank you for that introduction. I hope I can live up to it to your audience. But I just want to, more than anything, just introduce myself really quickly. And that is that I'm a real estate broker here in the Dallas-Fort Worth area, here in North Texas. But I do get calls from all over the country, and it's good to hook up with someone like you and other agents in other parts of the country, because I'm always getting calls from everyone. And the reason for that is because I've got, I like to do a lot of marketing on YouTube. I say marketing, but really it's educational videos. And I think it's a lot of what you do as well. And that's kind of one of the things that we've really hit it off. And those educational videos are really just how to get more information, share information, share the wealth of knowledge and share it with people, because I think there are mixed messages out there. And I just want to show, what I'm seeing, what I know, sharing that with people. And, I don't charge for it, just like you're not charging for this. So we're doing that for everyone. To help someone out. And I really do believe that, if you show someone how to do things and share your knowledge and be honest with them, I think they'll take care of you. And when it comes time to make a decision, whether it be credit repair, help with budgeting, credit questions, things like that, or in my case, looking to rent or buy a home or sell their home, then, they feel entrusted. So that's a little bit about me. Again, I'm here in the Dallas-Fort Worth area, specifically in the Louisville area, but I'm all over the Dallas-Fort Worth area. Currently, I've got some transactions going up in Denton. I don't know if you're familiar with the DFW area. If you think as a triangle, there's Dallas, there's Fort Worth, there's Denton, and down here is the Grand Prairie, Mansfield. So I've got a transaction going on in Denton. I've got South Fort Worth. Tomorrow, I'm going out to Grand Prairie and Mansfield.
Oh, okay, good.
Some action going over in Dallas. So I cover the Metroplex and help people whenever I can. But the biggest thing, kind of like I've mentioned to you, is I tell people the way, I help answer their questions. I have to be honest with people, and I don't always tell them what they want to hear. But I tell them what, the truth is. And it's those two things don't always match up. But you won't get the lip service. I'm a straight shooter when it comes to it.
Yes, you are. Well, I can appreciate that. And welcome to everybody, Mr. Walker, Jeremy. Thank you for everybody that's coming in, Mr. Banks again, and to all of them that are in right now. So we want to get right into it. Thank you so much again. And I'm going to put up his information as well. So we're going to have that going throughout the show before we do a commercial break. But at the end of the day, where would be the first place? So let's just say, and I'm going to be the guinea pig tonight, if you will. I don't really know. Most people have been asking me for years, well, I don't know a lot about the home process. And, maybe it's a married couple, the husband went through it, or maybe the wife went through it and the husband, still was on the deal, or maybe you're single, or, this is your first time. And tonight's show is actually entitled First Time Home Buyers, but we're going to try to cover as much as we can in the time frame we have.
Sure.
But where do I start? What is the first thing? Is the first thing for me to do is get in my car and go out and look at the baddest home, like MTV Cribs, like Oprah Winfrey. I'm excited. I woke up this morning, I'm sick of this apartment, and I want to go and get me a brand new home. What would you tell me as a brand new client of yours? And I just got through yesterday, looking at some homes. Where do I need to start?
Well, let me just start with the audience we have in front of us, whether you're watching live on Facebook, YouTube, or if you watch the recorded version of this in the future. I think if you're tuning into this, it's because you want information, because you want to know more about the process, whether it be repairing your credit, looking into buying, etc. So I think a good resource, just if you want to get some information, is your YouTube channel, which is what people are seeing. Now, I also have a YouTube channel. You're more than welcome to look me up. It's Luis Cuevas Realtor, and then you can just see my name there and just type that in on YouTube. I've got a YouTube channel that I try to answer as many frequently asked questions. I'm always getting new questions and putting up new videos, just like doing the same thing with the credit.
Yes.
So that's always a good source. Another thing that I would mention is you always have to have a plan. To me, it's about having a plan. And one thing that you want to do is figure out what that plan looks like. So maybe the plan is to move out of the home you're living at, maybe whether it be buying a condo, a townhome, or a big home. Whatever that would be, you got to look at how that plan is going to work.
Yes.
And at the very basic of every plan, especially a financial one, is going to be budgeting. Yeah, I know it's not exciting. Maybe that's not what people want to hear. The reason I mentioned budgeting is because it starts there. Budgeting is important because remember that once you do budgeting, you can work on your credit. So if budget's out of control, your credit's probably going to be right behind it as well. So
the first thing that you're saying, so we can break it down and move. So the first thing that you're saying, you have to you have to have a budget. You have to already be or get ready to be in that mode when you want to buy a home, or you're getting ready to make. To me, a home is a major purchase, as I tell my clients. So you got to do budgeting. That's the first thing. Y'all got it? So you have to be budgeting. You cannot go out there where they're knocking these stores down. So ain't much gonna be left after a while. But at the end of the day, you don't want to be saying, I want a home, but you still want to buy $350 shoes that you really don't even really need in this time.
Sure. Yeah. I mean, I'm a planner, and you always want to ask yourself, where am I and where do I want to go? And that first question, where am I? Your budget's going to tell you where you are. Right. Your budget's going to tell you where you are. Your budget's going to tell you if there's room for a mortgage payment in the future, or if you need to maybe work some more hours or cut down on some of those expenses, because you can't really look forward until you look at what you've got at the current situation. So budgeting, I know that's not an exciting answer that you want to hear, but that's where you got to get started. You got to tell your money where to go before you wonder where your money went. Wait. Say that again, because I like that. Say that again. Yeah, you got to tell your money where to go. Otherwise, you're going to be wondering where your money went.
You have to tell your money where to go, or you're going to be wondering where your money went. Oh, I love that.
That's right. And so when you're able to take control of your budget and tell your money where to go, then you're in the driver's seat. You're in the driver's seat.
Correct.
After that, obviously, is credit. You want to know where your credit stands. And again, you're a good service to check in with, and you can evaluate where you stand. But you got to make sure you're in a position to do that. Now, I know that right now, if you ask me, what's my credit score? Well, I think it's good, but could I tell you exactly where I am? I wouldn't. So that's where you would need to check in, with a lender, with a real estate agent, with someone like yourself, if you need those services, to see where you stand. And that'll give you an idea of the next step, and that is to be able to qualify. Because, again, it's no secret, you've got to have some good credit in order to be able to qualify for a mortgage. So qualifying for a mortgage means that they're going to check your credit. So
Right.
you want to be proactive and get that checked out beforehand,
Right.
or you want to just go in there and let them tell you where you stand. Either or is fine, but what you don't want to do is give your notice at the apartments and people apply.
Right.
And that's the first time you've ever seen your credit and you thought it was good and it may not be so hot. So again, check on that. I get a lot of phone calls from people saying, hey, I'm not ready to buy just yet. My lease expires in December in 6 months or whatever it may be.
Right.
That's okay, because you don't want to waste those 6 months. Instead, you want to check in to see where you stand.
Absolutely.
And then make those adjustments that you need to. And then that way you're prepared for your goal.
So the first thing is budgeting. First thing, all of these are on my top of the list first. First thing is budgeting. And then also, hand in hand, you want to make sure your credit is right, because credit is one of the top three, I would say myself, is one of the top three components when they're getting ready to decide how much house you can afford. And that credit is going to be linked to that interest rate as well. So not only because you feel like, well, I make enough money, but they're still going to look at your debt ratio. They're going to look at your credit, and they're going to look at your job history, whether or not you have had stable income for at least 2 years. Exactly. So and we'll talk more about that. We're just going to mesh it in. Yeah. But budgeting is a big deal. And so the reason why I love what you said about, and I'm going to put that up there again, because I love that. Hold on, let me see. Tell your money where to go, or you'll be wondering where your money went. I absolutely love that. That's a new little slogan. If I get any royalties off of it, I'll give you some.
All right.
But I absolutely love that, because most people just spend, but they're saying out of their mouth, I want a home, I want a new car, or, I want to buy some more property. And I'm not just only for first-time homeowners. Let's just say you already have a home, but you're working on your second home. Like me, I want to buy another home in Miami, certainly in Atlanta, but I still want to buy another one in Miami. So at the end of the day, that requires you to have a budget. In other words, you got to have that plan.
Exactly.
You won't be taking it for granted. And I'm going to give you my perspective, 30 seconds or less, later on in the show, about the annual credit report. Sometimes, you can pull that report, but it might not always be accurate if something new has hit your credit profile or something has updated. And let's just say you pulled it 2 weeks ago, but you just got a new collection that hit your credit report 2 days ago. Or let's just say you got a new credit card. So the report is going to be different, of course, but that's when that checking your credit, checking that budget, making sure you do your due diligence while you're calling Mr. Lewis, because at the end of the day, you want to help you. You want to help you get the house, not, help keep you out of the home.
Right. And again, just throwing that out there, remember, I'm not a loan officer. I'm a real estate broker. But inevitably, I have to know, just like you have to be familiar with the different industries.
Yes.
I have to know what the credit requirements, what the general idea for all these different programs are, because it's just part of the job. But budgeting, and then checking in on your credit, whether you want to be proactive about it. If you've got some dings or stuff like that, and they want to give you a call and check in with you on that. But you're going to have to get that credit check, and don't be scared to have your credit check. People worry about that more than they need.
They do.
And if you think a point or two is going to get you, disqualified from getting a mortgage, I hate to break it to you, you're probably not going to get a mortgage anyways. So let the professionals do that. Let the professionals do that for you, and you should be good and on your way. But once that loan officer checks your credit, they'll be able to give you 2 responses. And I want to talk about a couple of things before we talk about those. Well, I'll talk about it afterwards.
Okay.
Number 1, you're either going to get approved, or number 2, you're going to get denied. Okay?
Correct.
So before we talk about that, I do want to mention it. Real estate professionals, folks who check credit, someone like you, loan officers, they deal with credit on a day in, day out situation. They're doing it all day. They do it all the time.
Yeah.
So, I'm just throwing this out there because I feel the sentiment. I think it's out there. It exists. I see it. I witness this, and maybe you do as well. And that there's some hesitance from people on sharing their credit with someone, or they're afraid to apply because they're afraid to get denied.
Right.
There's some embarrassment in there. There's all that sort of stuff. And I'm here to tell you that, a doctor can't help you if you can't let them check your pulse, your heart rate,
Right.
in your mouth and say, and stick whatever that is in your mouth and all that.
Right.
You can talk about it all you want, but at the end of the day, you're going to have to let the professional do what they do and assess where you stand. And there's nothing to be embarrassed about if you think you're going to get denied. There's, loan officers and professionals don't go around saying, "Oh my God, this is terrible. Right. Look at this lady." It's nothing like that. So I would put that off to the side. And, the reward is much more, there's just no shame in that. I just have to mention it because I do feel it. It does happen.
Well, I think, if I can say this, I think it's crazy for you and you can tell Lewis is the nice one, so I'm the motor mouth. So at the end of the day, I think it's crazy for you not to be ashamed to go to Macy's and apply for 10% and get denied, and you don't have any shame with that, versus saying, well, I don't want anybody to check my credit or whatever the case may be. I get that because maybe you have done some stuff that you shouldn't have done, and most people, won't be honest. And I say this all the time in my seminars, there is no such thing as a little bit of bad credit. Cancer is cancer, whether it's a grain of salt of cancer or whether it's a big mass of cancer. Any one of them, if the doctor tell you you got it, you're gonna be like, oh Lord, I got cancer. Yeah. So there's no such thing, because a lot of times I've heard people over the years, well, my credit is not as bad as my daughter, or my credit is not. It ain't no such thing. Everybody's credit report is different. Everybody's financial deal when it comes down to getting a home is totally different. And it's going to be based on your income and your ability to bring contributing things that will help you get this deal expeditiously.
Yeah.
So for me, I love that as well. So what would you say? We got budgeting and we got credit. So if I'm trying to get my credit together and I'm working with Exceptional Credit Repair, and now I've left the 500s and I'm right at 610. Let's start right there. So I'm not at 620 right now. I'm doing what Mr. Lewis is saying. I'm budgeting. I'm fighting the devil because I want to go out and buy me a suit and I want to buy me some shoes. Yeah. But, I'm sticking to the plan because I hate my neighbors. They loud. They getting on my nerves. So, at the end of the day, I'm on the right track. And Mr. James have beat my head. He's told me to get his book. Lord, if he tell me about that book one more time. Yeah. So right now I'm at 610. So what is the next step? And let's I'm gonna throw a number out at you, so because I like numbers. So I make $60,000 a year, and I desire to get a home for 250. So we got 60 grand a year, and I desire to get a home for $250,000. And I'm budgeting. I'm not as bad. I'm not all the way there, but I'm not the rule breaker like I once was 6 months ago. So where do I start right now? Because I got the budgeting, and I'm working with the excellent credit guru. So where do I go right now? And I need to know this. Do I go for FHA? Do I go for a conventional loan? Hint, I've never been in the military, so I ain't got no military nothing. So what do I do now? I got 610. My score is 610. So what do I do?
So let me just say this. I know that we've got viewers all over the country, and I just want to mention that, the interest rates that you see are usually at the national level. Remember, each individual bank and lender will have their own programs that they'll have for you, but they all follow a few different. And that's kind of what, getting to your point. You've got FHA, you've got VA, and then you've got conventional financing. But here's again, going back, that's why meeting with a loan officer and getting your credit checked up front is a good idea. Remember about that person who's maybe 6 months out from being able to buy, because they can check in. The loan officer says, oh, you make $60,000, you want a $250,000 home, and you're at 610. They may be able to tell you, yes, you qualify, but you only qualify for certain loan programs or the particular credit. And so that may not be good enough for you. The loan officer may say, look, if you can get your points up by 10, another 15, whatever it may be, and you got 6 months to do it, then I can offer you these other programs. And that may be able to get you more money at a cheaper rate, at a better terms. Remember, people get really caught up on the interest rate. There's just a lot of variables that go into it. And I'll get into that now. Going talking about FHA, VA, which I'll put those together in conventional loans. Realize that there's two types of loans. Think about it this way. There is a government-backed loan. There is a private loan.
Okay.
A government-backed loan would be something like FHA. And VA. Okay. And let me just say what that means. It means that Uncle Sam is going to insure that loan. In other words, they're going to back that loan to the investor, who is the bank, who puts out the money, or whoever that may be, and says, look, if you let borrowers in this criteria, and by the way, FHA and VA have more favorable criteria for home buyers.
All right.
The government says, hey, if you loan money using our program, you know, it's your money, but we'll back it. And if they meet these criteria, you know, they will insure it. And what that means, or back it, if you will. And what that means is, if you're willing to give a loan, and let's just give that example to someone who has a 610 credit score. If you give that loan to that person, they're going to say, hey, we only require you to give this percentage down, that percentage. Let's just say all these terms are very favorable, right? Because it's for a VA, a veteran, someone who's served our country, and they're trying to repay them and help them out. Or an FHA, which is a first-time home buyer, typically, not always. They give them favorable things to qualify. And a lender usually would say, ooh, I don't want to do that sort of loan. But that's when the government comes in and says, well, if you do that and the loan goes south, we, the government, it's a little bit more complicated than that, but we, the government, will step in and we'll make the loan right. In other words, the bank doesn't lose. Okay, because the government is backing them up. Right?
Oh, wonderful! So it's a government-backed loan.
Exactly. But just like anything with government, they've got requirements that go with it, and their requirements, luckily for first-time home buyers, is they're favorable for people who are buying for the first time, who traditionally have lower credit, have less money, have less, you know, etc. And for veterans, which we'll get into as well. Now, you also have conventional. Conventional is privately backed, okay? So in other words, their terms are a little bit different. They're typically a little bit more stringent. They require a little bit more down. They require a little bit credit score. All these other requirements that they have, their debt-to-income ratio, which I know is something that you mentioned, et cetera, et cetera. The ratios are a little bit different. But guess what it's all based on? It's all based on a credit score. If you have terrible credit, your options are limited. If you have a much better credit score, then you have more options, right? So again, everyone thinks of those interest rates, but you got to realize it doesn't matter if it's a good interest rate if you don't qualify, right?
Oh, wait a minute, wait, because that's it. That's what I'm waiting. So with the FHA, they're more lenient, if you will, with the 580 on up, because it's government backed. It's a government, well, I just wrote in my notes, a government backed loan.
Correct.
And so with the conventional, y'all got it? So with the conventional, it's more private. So the requirements are a little bit more stricter. Yes. So I want, And so I'm glad you said it, because I didn't know another word to say.
Yeah.
So, because it is. So for a lot of the private particular loans, then you would want your score. Now, if it was me, I would tell my client, you want it at least 640 and above.
Yeah.
So that's what I would do.
Fair. Yeah, that's fair. And again, you got to realize there's people out there with 700 credit scores, higher than 750. I don't even know what the max is anymore. 800s, whatever it is.
850.
Yeah, those people want, they're saying to the lender, at that point, they turn around and say to the lender, listen, I've got an 850 credit score, 825. I am as safe as they get.
Yeah.
So for that reason, I want lower fees, right? I want lower interest rates, more favorable terms, and the lenders are willing to do it. But if you're on the other end of the spectrum and you're more of a risk, a lower credit score, all those stuff. Well, guess what happens to the fees, right? And the interest rate.
And I talked about that on a previous show. You all remember when I talked about being a low risk and a high risk? I wore that out one night. I forget what show it is, but I talked about the low risk. You don't want to be a high risk. You always want to be a low risk because you get more favorable terms. Favorable. And you know what I was thinking about, Lewis? This is the language of real estate. This is the language of buying a home. So everything has a language, you know, whether it's Ebonics or not, everything has a language, you know. So at the end of the day, you need to understand the language because sometimes you can go in, especially if you're dealing with an attorney or whatever, which that is involved as well. And so at the end of the day, if he says some or she says some particular word you don't understand, you kind of lean over and say, now that's a big word. What does that mean? So you need to know your rights and you need to know so you can get that favorable loan. So I love this. So the FHA in a nutshell for me, if I was taking my notes, is a government-backed loan. FHA, government-backed loan. FHA, government-backed loan. Y'all got it?
So
go ahead.
So let me just get into a little bit more details in regards to FHA and VA. So think about an FHA as open to everyone, right? People who want to buy a home, an FHA loan. Now, remember the requirements are going to be a little bit lower. All those other things. As a result, your fees may be just a hair higher. Your interest rate may be just a bit higher. Mm-hmm. Is it a lot? No, it really isn't that much.
Right.
But just realize that an FHA loan is favorable to first-time home buyers. Now, I want to tell you about another thing, and I don't want to confuse you too much, but here's another difference between a conventional, which is private, and an FHA, which is a government-backed loan. An FHA, remember I told you that Uncle Sam would come in and make it good? So in other words, the bank lent that money, right? They gave that money, and then they had to foreclose in a few years. The government would come in and say, okay, you foreclosed, you collected your money. How much are you short? I'm 20,000 short. The government comes in and makes it whole, right? Okay. So the lender can't lose.
Right.
It's a little more complicated than that, but that's the general idea.
In a nutshell, yes. Right.
Well, in order for you to have that in your payment, right, which is a whole nother topic, in your payment, you're going to be charged normally for principal and interest to pay back the loan, your taxes, your insurance, and then one more thing, which is called mortgage insurance.
Yes.
So mortgage insurance is exactly that. It's an insurance policy you're paying to Uncle Sam or the bank, and they're paying Uncle Sam, whatever that goes to. But that money gets collected from all the other FHA loans, and that helps to fund that government-backed account. So when there's a foreclosure, everyone who has an FHA and is paying that mortgage insurance helps to pay that. So it helps as a whole. And if you remember after the recession, they made a lot of changes to it. And one, they raised the rates, they went a little bit higher, and they changed some of the rules, which I'll share with you. One of the rules that is in place now is that mortgage insurance, which could be, I don't have my percentages in front of me, but say on a $200,000 home or whatever, I mean, that's going to be 130 some odd dollars, 140, 150. I mean, it's 150 a month is a good amount of money.
Yes, it is.
100, whatever. That's a good amount of money. On an FHA loan, okay, it stays on there for the life of the loan. So you got it for 30 years, you're going to pay it for 30 years.
Right. Okay? Now, let me ask you something real quick as a student here. So, and I love this because I just had this conversation yesterday with a mortgage lender. And so said the exact same thing. A young lady in a different state said the exact same thing. So the thing that I want to know is, and I believe she said this to me on yesterday, the mortgage insurance, is it required with all types of loans?
No.
Absolutely. That's what I wanted to know.
So, and that's kind of where I'm getting to. With an FHA loan, it's required, okay? Now, with a VA loan, that's a whole different type. And think of it as an FHA loan, but with additional benefits. Remember, these are veterans who served our country, so they're trying to go the extra mile.
Right.
They sometimes, or they won't have that mortgage insurance. So they say, okay, now that's $120 that I can either keep and not have to pay, or more house that you qualify. Right. But on a conventional loan, if you don't put a 20% down payment, okay, so let's say you're buying a $100,000 home, if you don't put at least $20,000 down or 20% down, then you have to have that mortgage insurance. Once you reach about the 78-20% equity, then you're eligible to have that removed.
Correct.
Whether you do it in 5 years, 7 years, however long. So then 25 years after, first 5 years you have it. After that, you get it removed. Then 25 years, you don't have that payment anymore, right? Or you can pay towards principal, whatever it may be. Now that requires that you put a 20% down payment. But keep in mind, if you only put down 5% and you have to pay it, in the future, you can have it removed. With an FHA, you can't. So again, to me, that would be an incentive on your credit to have your credit good enough to even go for a conventional loan if you wanted to. Now, if you don't get a conventional loan right off the top, it's okay. It's not the end of the world. My first home was an FHA loan. What people can do is, if they want to just go ahead and get the house now, they can do an FHA loan, get it, and you're like, oh man, but I'm stuck with this mortgage insurance for the life of the loan. Right. Well, what a lot of people do is they gain equity, whether it be 3-4 years or as hot as the market's been now, depending on your area. But we've all usually seen some appreciation in values. After about 5 years, you may already have that 20% equity in there. You refinance into a conventional, and they're seeing that you're only asking for 80 and the property's worth 100, and they say, okay, you won't have to have that mortgage insurance.
Correct.
You get rid of it. So there's different little things that you can do, and this is where getting with a professional really helps. Not only a real estate broker, but also a loan officer or someone who does credit repair, because I'll get it. I get it. We all want to inform ourselves. Yes, there's YouTube. Yes, there's all sorts of information out there. But once you get in front of a professional, they can assess your situation. They can see what rules apply, etc. I give this example. Sometimes people say, well, why do you use the tool you use? Why do you use that program when I can get Credit Karma? Why do you use that program when I can get my credit check through Chase? Or why do you use the tools that you use? And sometimes I'll ask people, I'll say, what do you do for a living? I had a guy tell me that he installed drywall, right? And I said, okay, so you have tools, right? And he said, yeah, I got tools that I got to use every day, and they got to be reliable. They got to do all this stuff. They got to, they got to be good and do it every day. And I tell them, well, why don't I go hang my own drywall? And how much is your drill? Oh, that's a $350, $400 drill. I mean, this is top of the line. I don't know what drills cost, but I'm just throwing out a number. And I could tell them, well, I was at IKEA the other day, and I saw that they had like a $7.99 drill for $10 or $15, or you buy it in a pack for $35. And that's when they tell you, oh, no, Louis, no. Right. Glass, they don't have the power, they don't have all this. And I tell them the same thing. I said, when you're going on to those credit sites or those miscellaneous sites or whatever it is, I'm not going to name too many names, but the biggest one being Credit Karma, realize that that's the same thing. It's not the tools that you have in your tool belt, and the tools that you and I have are a little bit different and more on the professional level to be able to help you. And again, all these things that we talk about, many people, when they're advertising to you, hey, get into a house, here's the interest rate, they don't tell you about all these details. And that's what I like to share with my clients, is tell them about all these details. And a lot of times it's a lot of different things that they never even thought about or knew about, because they're so concentrated on the sales price or the interest rate. But you got to think there's other things to consider as well.
Right. And before we go to the commercial break, man, they love you. They already said great
All
job.
right.
Information, great information, favorable terms. I love that type of language. So here, FHA, because I hear this all the time. I've been hearing it for 28 years. FHA, you will have that particular mortgage insurance for the life of the loan. Am I correct?
Correct.
So I want you to know, because I've heard this over and over, and I get a lot of people that say, I want the house, but you don't understand that it's a whole lot that will go into the paperwork. That's my job behind the scene. I don't want to show you the house. Now, Lewis is going to show you the house. He's going to sell you the house. He's going to walk through. I'm just going to make sure you qualify so you won't waste Lewis's time and you won't waste your time. All right. So at the end of the day, but with a conventional, that's my category. The conventional loan, I don't want to keep it unless I desire to keep it. I want to have that option. So, but it's nothing wrong with getting the FHA loan. Those are outstanding loans. If that's what the route you have to go, fine. There are many ways to get to Washington, D.C., whether you go 85, take 95, or whether you go straight 95. So at the end of the day, I love that example about the tools and all of that, because at the end of the day, you got the FHA and you got the conventional, and then you have the VA. Now, what I want to ask you real quick before we take a quick commercial to let you get some water or stuff. With the VA, now this is my pet peeve, because I know they fought for the country, and my dad is retired out of the military too. Now I'm his son, and I can't even use the VA loan myself. Now I wish to God I could get that VA loan. That look like the VA loan just have like American Express, you know, when you got the platinum card and the gold card. I got the gold card and stuff like that. But you get certain privileges. I'm gonna put it that way with the VA loan. So can you? Let's do it after the commercial. We're gonna come back and we'll start right there. After the commercial. Because I really want to talk about the VA loan, because I understand now even more out of all the time I've been doing it with the FHA and the conventional. I'm very familiar with that process, but I wanted to understand and kind of get rid of some of those, people that say, oh, well, you know what, I got a VA loan, and they don't even understand what's going on with that particular government-backed loan. So we're going to take a commercial, and we're going to jump right back in it after this break. Well, we're back with the maestro himself, the man of the hour, Mr. Lewis, the real estate broker, man. He's teaching us some good things. I got my notes. You need to have your notes. I got some stuff. It's nothing wrong with taking some classes every now and then and just refreshing. That's what I feel tonight. It's like a refresher course, and we're in school and we're learning, because you need to be equipped, because the pandemic have changed. Have you seen some stuff change? And that's all I keep hearing in the industry, especially I do credit and finances, but of course it's what Mr. Lewis does is linked together. So I'm always hearing from real estate agents and brokers and stuff that some of the requirements have changed.
Yeah, they definitely have. It's affected every part of the industry. I got to tell you, as much as sometimes I really hate to do it, I got to turn on the news and watch it. And, sometimes it's just not fun to watch the news, and they're not the most upbeat and positive. But you gotta keep checking in on the news to see what's going on, to see what, the government is doing, because there have been some different issues that have come up when they've tried to fix a problem. Sometimes they've inadvertently created a bigger problem. And so absolutely, that has definitely happened here recently when this whole crisis management has come on.
Let me read the comment that's coming in. Mr. Simmons Jr. He said, oh man, I'm loving it. All the information that you are giving, because I'm in the process We hit it on the head tonight. I'm in the process of buying my first home, and all of this information, the last week's show. He said this week before that all was awesome. Thank you, thank you, thank you, thank you. So that is amazing. Thank you so much for watching the show. That's what it's all about, you know. So we were talking about before the commercial break as well about the VA loan. So I know the VA loan. Does the VA loan have to have mortgage insurance as well?
So actually, there are different types of, again, the loans that they'll do under VA. It's all considered a VA loan, but the qualifications for that are a little bit different than your FHA. In there is the service to your country, right? Not only your service to your country, but you have to be in good standing. So if you just quit in the middle of the battlefield or the middle of training or whatever it is, and you were dishonorably discharged, you know, you can't. They won't qualify for that because one of
say that again. So somebody tried to pull the wool over my eyes, so that's why I've been waiting to kind of let that. So it's being recorded on this live show. So if you was dishonorably discharged, do you still get the option to have that VA loan? From my perspective, is no. So what do you say about it?
No, they don't, because remember, one of the things that they're going to have to do is check in. And again, I'm just putting this in broad terms just to kind of keep it simple and the amount of time that we have. But to put it kindly, they're going to check in with Uncle Sam and make sure that you were good, and then they've got to get back to them and say, yeah, this person was, you know, on the up and up and everything's all good. Another part of the equation, before I get too far into that, I want you to realize that. And I know you do, but I'm just saying that the lender in this case takes it into consideration, or the VA takes it into consideration, which is why I mentioned there's different levels of VA loans that are out there. Sorry, there's a general one which most people see. I will tell you that there is not the mortgage insurance that the other loan products offer, but they do have what's called a VA funding fee. And that funding fee can be significant. It is another fee, and it's rather large, in my opinion. Again, to each their own. But the beauty of it is that VA is willing to fund that fee to let you borrow. So in other words, let's just say, and this is just a very broad example, you're buying $100,000 home. Theoretically, you're borrowing $100,000 is what you're asking for. And let's just say that VA funding fee, I'm just throwing out a number, is $500.
Okay.
They will roll that in to the loan. So you can buy a $100,000 home and walk out with $102,000 mortgage, right? Okay. So in other words, they're willing to finance it. And that's how they get to the zero down, zero closing costs, zero, all that stuff, because they're willing to roll that in. Now I have
let me ask you this, because I hear this all the time too. So that you can negotiate and have some of those things that would come out of pocket, it can be added in the loan?
Correct.
Okay.
Correct. Now, again, I'm certainly not here to give my opinions and tell people what to do or not. And you know, is it helping the veteran, the community? You know, you could say that it is or that it isn't, because on one side you could say, and remember the debt to income ratios, which we really haven't touched on, and I don't know if you've explained to your audience, you know, kind of those details, but when you have the VA will allow a little bit higher debt to income ratio. So where FHA, they didn't allow you to have that high DTI, debt to income ratio.
So what are some of the standards ones then? So what is one? Is it 43%, 45%, 50%? Does that?
Yeah, no, you're hitting the nail. You're hitting it right on the nail. And you know, I don't have the numbers in front of me, and I'll get back into that here in just a second. But you're right. You're able to have that higher ratio, okay? And they're willing to take that on, again, because Uncle Sam insures it. So I just want to back off just a little bit and just get back to the, hey, we got to check in with Uncle Sam. You know, one of the unfortunate parts about being a veteran is not everyone who goes in to be a veteran goes in a peacetime, right? I know when I was in the situation where I was going to be going into service and stuff like that, and I thought about that, there was nothing going on, right?
Mm-hmm.
And so there are a lot of people that go in and come out, and it's just, I don't know, a good time for 4 years, and they serve their country and all that sort of thing. I don't want to minimize that or anything, but then there are the people who go into combat, who do the, the things that have to be done, and they see the ugly things, and they come back disabled in one way or another. And that could be in all sorts of ways. That could be physically, right?
Yeah.
Seen those wounded veterans who come back physically disabled, or what's been really common is mentally disabled. PTSD being the big one.
Mm-hmm.
And so in that form, one of the things that they're checking in is, are you disabled as a veteran?
Mm-hmm.
I do know veterans who are, and they do a percentage, right? And again, I'm keeping this very broad.
Absolutely.
For those who are disabled in one way or another, they'll give you a percentage of what you're disabled, right?
Mm-hmm. Mm-hmm.
And so for some of them who are disabled beyond a certain percentage, and I don't have those percentages in front of me,
Mm-hmm.
they are more relaxed on their requirements, and they're more relaxed on their fees, and they're more relaxed on et cetera, et cetera.
Mm-hmm.
So if you're out there and you're a VA, you served our country, and you have whatever that disability may be, whether it be physical, mental, whatever it may be. And I think if you're out there and you know what I'm talking about,
right,
those requirements are much more favorable for the veteran to apply. And that is where in my opinion, the government really does a favor to our veterans and really helps them out to qualify for a loan. And a lot of the fees can be waived. They can get some credits. It's I don't know all the ins and outs of that, but that's just one thing that I want you to know, is that those things exist. Those options exist.
And I will say this too, and I want to get to Beverly Curry. Thank you, Beverly Curry. I know my sister Arlena invited you, so thank you so much for your information as well. This is what I want to say too, and we want to get you as much information, because buying a home, first of all, when you become my client, is a major purchase. The top three is student loans, buying a home, and a car. Because they're going to tell you out of the gate, I need to buy me a car. I got to go to work. I need to buy a car. And some of them jokers don't even go to work. So at the end of the day, but they want a car. And not just any car. They want a Mercedes. They want a BMW. And I'm thinking, you don't even need all of that. All right. Yeah. So at the end of the day, we have budgeting. We have credit. Credit is king. Credit is king. Don't show up and waste anybody's time unless you've got that credit together. Get your money and get your credit together. All right. So we got the FHA, we got the conventional, and then we got the VA loan. And what I want to say that Lewis said so wonderfully, that once you become his client and once you're working with him and you are in that process, so whatever your particular deal is to buy that home, they will tweak it, get you all the information. So, this show is only an hour, so we can't cover everything. We're just trying to cover as much as we can. And I promise you, I'm going to have him back. But at the end of the day, that I will say from my perspective, from Exceptional Credit Repair LLC, I always deal with the FHA and the conventional, and I hear about the VA. Those three are the top ones that I always hear about.
Yeah, those are the main characters, if you will. And there's pros and cons to all of them. One thing that I always get asked about is what about programs like down payment assistance programs, help with closing costs, help with all this sort of stuff. Realize that there's all sorts of options that can help out. First-time homebuyer programs have their pros and cons. Some of them are very generous. Others have red tape attached with them, and that's where you really have to. Assess whether it's worth it or not. And again, that could be a whole nother program all on its own. But you won't know until you visit and sit down with the professionals so they can go over your situation to see what applies. And remember, I'm in the North Texas area, and there's programs that are specific to my city, to the cities here in the Dallas-Fort Worth area individually, to the state of Texas, which may not apply to your area, but there's a professional at your level, who knows your area, who can definitely help you. I wanted to mention one last thing. Well,
Lewis, while you're talking, keep talking, but I'm going to put his information because I got people texting me on all of these devices. They want to, if you're here in Texas, I'm telling you, if you're in Arlington, if you're in Grand Prairie, Las Colinas, y'all Las Colinas people, I love you over there. Y'all Las Colinas, if you're in towns I don't know, if you're in, what's my other town? Frisco. I love Frisco. So the people that's in Frisco, I like, what's that mall over there? South something or one of the malls over there, they treated me right. I just had a ball over there. So, yeah, and there was a Galleria or something. I bought some Coach bags and all of that stuff. They trying to steal them now, but at the end of the day, DeSoto. Yeah, you in DeSoto, Mansfield, Grand Prairie, Fort Worth, all of that. He is the man. So I want to put his information while he's finishing that thought, and that's his number. You all can get in contact with him. That is his information. If you're in Louisville, I'm telling you, it is just, the Sonics is over. When you see the Sonics, you know you're in the right place.
There you go.
So that's his information. He's the real estate broker. His number is 214-783-0535. That number again is 214-783-0535. You need if you need somebody that's going to explain it to you just like he's doing, you see his temperament, so we talked about the FHA, we hit conventional, and we also hit the VA, a little bit of information about that. And I want to say this to you all as well too, because we're gonna do something because the time, my God, the time flew by, but we started. We're going to do something really quick. These are just yes or no answers. This is all I need from Lewis to say yes or no. Yes or no. Number one, yes or no, do you have to have money saved up? Yes or no, to buy a home?
You got to have some money.
Yes. So that's a yes. Okay. The next question is, because I got a bunch of people asking me a good question. The interest rate, have you ever seen it go over 10%? Buying a home?
No, I haven't. But I'll tell you, ask your parents, ask your grandparents if they bought in the 80s and 70s. That was normal then.
Okay, so what is, just give us really quick, what is a good interest rate that we can live with, even if it's a little bit high, but we know we're going to refinance it because this particular person is thinking, and I know how it is, the real deal. They're just thinking, I got to get in the home. I got to get in the home. What is an interest rate that you could live with really quick?
I can't do it quick. You just hit my soapbox.
Yeah, I know it.
My soapbox real quick.
Yes, go ahead.
Oh man, let me tell you again. I'm serious. Ask your parents, ask your uncles, ask whoever. If they bought a house in the 80s, they would be telling you that it was 20% or 12 interest rate, 14 interest rate, and they had 20, 30, 40% down, etc. So the times we're living in, guys, they're giving this money away at these interest rates. Now, I purchased my first home in 2003. Okay, that was post 9/11. Yes, I bought my first home in 2003, somewhere around that time. Those years are a blur. And the interest rate, I had phenomenal credit. My interest rate with an FHA loan, the going rate at that time, and I locked it in because it was a good rate, was 6 3/8. 6 3/8. Okay. To me, that's normal. That's fine. Everything's good. But now we're talking about, I just talked to someone, a loan officer. I was meeting with the client who I'm meeting with tomorrow. And they were talking about possibly getting a 2.75.
Well, absolutely. Because I'm trying to get me a 3 something and trying to get it down to 2. Right.
Yeah, and I'm thinking, and if you're thinking about, oh man, at 3 1/4 or 3 1/2 or 3 3/8, guys, get out of here. It's ridiculous. It is straight ridiculous how good the rates are right now. It is unbelievable. You have to realize, what's happening is in that, look at the unemployment. You look how high the unemployment is. Look how, the numbers haven't come out, but the economy, while it's on the up and up, it's been on the down and down because of this whole COVID situation. So do you think interest rates are going to be high to try and, slow down this growth? No, they're going to be low. And right now the interest rate are just ridiculous low. If I was a bank, I would not be doing mortgage loans.
Right. because they're not going to make a whole lot off of it.
No, not at all. So, so now you're talking about pennies and dimes, and
Right.
no, just go for it. So I don't know what my answer is, but go for it.
But you said a whole lot of answers, and you answered a whole lot of questions. You said it, so that's good. So, and Beverly, thank you for your input. I like it when other real estate brokers are in the house as well. So, Lewis, you got them coming at you, so they can come out. So that's good. So, and Beverly, you're doing wonderful. Thank you. One thing I will say this: you have to have some money saved up. There is a such thing. We're going to go back into some of that in depth at another time about the earnest money. So that's the money that you need, because there are going to be other fees and different things of that nature. Rule of thumb for me is you want to make sure that you have at least $5,000 saved up. You want to make sure that at least $5,000. For me, now that's my challenge to my clients. You at least want to have $5,000. And so at the end of the day, it is going to be wonderful when you get ready to buy your home, whether it's FHA, whether it's the conventional or the VA loan. One thing that I'm going to say, also, go ahead, Lewis.
I wanted to say one thing. I wanted to share with your audience that keep in mind that, and this is something I'm very conscious about when I talk to clients, and you are as well, but specifically loan officers and lenders, when we start talking real estate jargon, real estate words, that's our language. I try not to talk to them, to clients in that manner, or at least I explain to it, especially if I get a blank look. But one word of advice, if you're going to go out there and think about applying, calling a loan officer, et cetera, having that conversation, one thing that I want to mention to you is when you and I, when we're out here in the real world and we're saying, hey man, I want to get into a house, I want to go buy a car, or I want to go do all these different things, everyone always talks about the down payment, okay? And the down payment to you and I as regular folks, going to work and doing our thing,
right?
My total out of pocket. That's what the lingo means, right? Down payment, right. Total out of pocket. But that's not how it works in the mortgage industry. Right. There's two pieces to the down payment equation. And in real estate lingo, down payment, okay, one portion, and then there is the closing cost. Yeah. And that is your total out of pocket. And when you want to know how much is it going to take, don't say down payment, because loan officers will only think of that one part of the equation, and then they'll forget to tell you about the other one. Tell them total out of pocket. That's what you really want to know.
Okay, so say that again. Total out of pocket. When you get to explain. Okay, I got you.
Total out of pocket.
Awesome. So we've learned tonight, you got to have a budget, got to get that credit together, and you must make sure that you get the correct information with whatever mortgage company that you'll be getting. That's the way I put it. The mortgage company that you're going to be getting your mortgage from. Now, for me and my particular company, I say anything under 5%. If you can get it under 5%, we're on the right track. You're heading in the right direction. Whether it's 4%, whether it's 3.9, so it is really amazing. When you're talking about mortgage. So at the end of the night, thank you so much. It has been amazing. Mr. Lewis, thank you so much for being my guest. Hopefully we've answered some questions. I'm going to let him give his information out again. So where can they reach you at? I know you have your platform on YouTube, but where can they reach you again?
So I'm always available. As you said, you put my business card up there. You're more than welcome to reach out to me. You can give me a call, send me a text message. And of course, that number is 214-783-0535. Again, that's 214-783-0535. Also, you can check out my website, which is Serve Realty TX, like Texas, TX.com. Yeah. Again, that's Serve Realty TX.com. Or you can check me out on YouTube as Luis Cuevas Realtor. And again, you'll see that on my business card as well. And of course, the same on Facebook. So I'm out there. I like to give a lot of information. I like to do a lot of videos, and a lot of questions that I get from the audience and different folks in the community inspire me to make those questions. But I'll tell you this much. The basic idea between, on my brokerage, if you will, is pretty simple, and it says it in the name, and that's serve, and that's to serve. My
Right.
motto is I'm here to serve, and that's because I feel that I'm here to serve clients. I'm here for a purpose. I'm here to help them achieve their dreams, their goals, whatever that may be. And so I think at the end of the day, we are here to serve someone else, to be of service, and that is a big thing to me. And the second part of that is that I truly believe that an educated consumer is a strong and less likely, a strong consumer, an educated consumer is less likely to be taken advantage of. Because I got to tell you, there's some bad people outside your door.
Absolutely.
If you're not informed, and if you don't, have those tools that, you're going to give them when it comes to credit, and I can give them when it comes to real estate, then they may fall for that fraud. They may fall for that scamming. They may fall for a good to be true. And so when you're educated, you're less likely to be taken advantage of, because those bad people are out there and will take advantage of you. So I really think once you educate someone, they're a better and stronger consumer.
Absolutely. Well, thank you, my friend. I really appreciate it. You have done an amazing job. You all get back at Lewis. I'm going to put his information out. Well, it's already been an hour.
I thought we just started.
Yes, I know, but it's been amazing. Thank you so much. It has been a great job. If you're in Georgia, please holler at Beverly Curry. Beverly Curry. This young lady, I have no doubt if Arlena recommends her, I believe it. And you could tell she's on her stuff. I like her input. So if you're in Georgia area, I don't care, Duluth, Lawrenceville, wherever, you can reach her at 678-587-7991. All right. So get at her. Make sure you contact my friend Lewis here, the broker, the real estate tycoon, the agent. All right. It's been amazing. Thank you so much, my friend. And I will see everybody on next Tuesday night. Make sure you subscribe. Make sure you share this information, because some first-time home buyer needs to understand it is life when it comes down to making sure that you get your dreams to come true. All right. Until next time, thank you all so much. And I will see you on the next credit show. Lewis, thank you so much. I appreciate everything.
Thank you.
You're welcome. Have a good one.